two insurance companies in California raising their rates? No way. I don't believe that for a second. It's what we're doing after the wildfires. Two major California home insurers to raise rates later this year, affecting 666,000 customers. Now we had State Farm basically asked for a 22% aggregate raise, and California Insurance Commission said, nope, you guys got to come back with a better proposal, because these companies need to raise their rates so that they can remain, solvent. Let's get into it. Let's see what these two companies are doing. Here we go. All right. So we've got regulators have given two major insurers the okay to begin raising rates for 666,000 customers. Mercury General, fifth largest home insurer in the state. It'll begin raising rates in late March for its 579,000. That's the vast majority of the people we're talking about here. 500,000 people. Condo owners and dwelling rental policyholders by an average of 12%. A little bit less for the condos and rentals. For homeowners, 12%. So this is per filings with the California Department of Insurance. And those who get their homeowners insurance through Safeco, subsidiary of fourth largest insurer Liberty Mutual, they'll see their rates raised by an average of 7.2% in May, about 86,000 customers. So these are the known quantities of what's going to happen with insurance in the state of California. What's going to happen in the rest of the country? Yeah, your insurance rates are already going up. They're already going up, and they're going to go up a bunch more, because what happens in California, what happens in North Carolina, what happens, wherever, when you've got these massive incidents, they got to write the balance sheet, right? And this is how they do that. We're going to need some more money to cover the outstanding obligations that we have. Liberty Mutual's rate increase doesn't impact condo owners or renters. The insurer told regulators in December that it plans to exit the condo and renter insurance markets in 2026 as it seeks. So they want to get out of condo and renters insurance market in 2026 as it seeks, get this, in quote, a sustainable business path forward in California. Yeah, we're not going to do any home insurance, no renters insurance, nothing to do with that whole home rental condo thing. We're not doing that. That's their business path forward, to get out of the market, still stay in California for the other stuff that doesn't have quite as much risk, right? Customers at either insurer can expect to see the impact of their individual premium at their next renewal following the rate's effective date. Isn't that special? You're just going to see a boop go up. This is happening across the United States, though. Every market is getting hit with insurance increases. And it doesn't just have to do with, there's a lot of wildfires happening, or, there's a lot of, tornadoes happening, or, hurricane winds. You don't have, storms coming off the sea. It's not necessarily about that either. It has a lot to do with how much inflation has driven up the cost of things. So these insurance companies, when they got to go back and pay for these repairs, and these repairs are literally going through the roof. I don't know if you've talked to anybody who during the pandemic got a quote and then tried to come back and get that quote honored during the pandemic. Prices were rising so hard on materials during that time period that it was kind of like this moving target. Well, we think it's going to be about, a square of plywood for your roof. And the amount that my roof, I had my roof done early on in the pandemic. I can't remember when, but I remember hearing the quote from the roofing guy that did it, his company that did it, how much he had bid on mine relative to when I had it done just a couple of months later. Now, you sign that contract and then they put you in their queue and then they come out and do it. It was a guy I knew from high school. He was a teacher. I was a student, got a big company here in the Pacific Northwest. So I had my roof done by this guy, right? And the difference, I can't remember what the actual numbers was, but the difference between a square of plywood, 4x8 sheet of plywood, between beginning to end, it was just, it was like, wow, that is a huge increase. And that happened to all kinds of materials. Well, insurance companies got to pay those increases because insurance companies got to pay those increases if they want their customer to, rebuild. That's what we're doing. Neither insurer indicated plans to non-renew large amounts of customers at once, meaning non-renew. Okay, we're going to go through a non-renewal process. That is effectively not renewing you. It means they're effectively doing nothing. We're going to do a non-renewal on you. Oh, hey, great. That sounds excellent. When's that going to happen? Nope, already did. Not renewed. Non-renewal. It's according to their filings, but both told regulators that they're restricting which parts of the state they'll write new policies in. Are you anywhere remotely close to the coast? Do you have wildfire potential? Oh, you do? Yeah. We're going to non-renew you. Spokesperson for Mercury said in a statement that the rate increase was necessary to address the rising costs of plumbing-related water losses. Okay. All right. And the rising costs of repairs, construction labor, and materials. That's what all these companies are bitching about. And the inherent risk of what they've just gone through. Now, these two companies don't insure a ton of homes in Pacific Palisades or in Altadena. Otherwise, you'd be reading about it. State Farm was one of the big ones and a couple of others. But these aren't ones that are heavily in. And if you've only got 670,000, you're not too heavy. You're a player, but you're not too heavy, with exposure. Both companies' requests were first submitted in June, months prior to the LA wildfires. So this does not reflect anything current. This is just business as usual. Both insurers reportedly expect large losses from the fires. Not good. So expect to have raises even beyond that. Substantial. At an earnings call earlier this month, Mercury executives say they expect to pay between $1.6 billion to $2 billion to wildfire survivors. Liberty Mutual expects losses greater than $1.4 billion. I mean, the impact that this is going to have on insurance is it's going to be nutty. Meanwhile, you've got the California governor, we got Governor Bill Cream asking Congress for nearly $40 billion for Los Angeles wildfire relief. And then I read, right before I started this podcast, I read that Trump or J.D. Vance, I can't remember, Doge, was saying, you know what, there's going to be some strings attached to any federal money we give California. And one of them is we're going to defund the Coastal Commission. Like, oh, okay. All right. We'll see how this goes. But we got Gavin Newsom asking for $40 billion for Los Angeles wildfire relief. Can you imagine? Trump is going to put him through the ringer on this. Oh, yeah, we'll give you some money, but you're going to have to comply. You're going to have to bend the knee. You see that back and forth Trump had with, I think it was Maura Healey of governor of Massachusetts. Is she in here? Is she in here? And he just basically finds her and says, are you going to comply with ICE deporting illegal criminals from your state? She basically goes on to say, we'll follow the law. We'll follow the federal law. And Trump says, we are the federal government. I expect you to comply. And she comes back with, we'll see you in court. And he goes, we'll see you in court. And it'll be an easy court case. Guy he just goes in hard, right? No nonsense. That's fine. We'll see you in court. I'll sue you then. It's the president of the United States. He's a baller, just gangster style, just goes in and California Governor Gavin Newsom has asked Congress to approve nearly $40 billion to help the LA. Okay, Newsom sent a letter Friday. LA is one of the most economically productive, but it can only rebound and flourish with support from the federal government. Now, the reason I read that is because none of those homes could be built and California would do just fine. LA would do just fine. You just got a bunch of rich people's homes and some economically not as rich people in Altadena. In those communities, their homes are gone. No businesses were really burned down. A couple of businesses went down, right? But it's not like you're talking about downtown LA where their financial district is. And even if it was, LA just doesn't really do all that much business. It's Hollywood. It's a show tunes community, right? Estimates of the total economic loss. This is a big number. Total economic loss, meaning jobs and wages and all that good stuff. It's going to surpass $250 billion. billion. More than 16,200 structures were destroyed in Pacific Palisades, Malibu, Pasadena, and Altadena. Just enormous. I mean, just absolutely crazy how big those fires were, right? Here we go. Statewide insurance costs may rise, shocker, as California grapples with post-fire financial strain. Everything's going to go up. Cost of construction, day labor, contractors' costs, insurance. I mean, everything in the pipeline is going to go up because there's only such a finite amount of supply to make this reconstruction happen. I mean, it's going to take a lot of Fed time to just basically haul out all the debris from these communities. I mean, Maui, Lahaina is just now permitted 10% of the 2,000 homes that were burnt down. And this is a year and a half later. They've been doing cleanup this whole time. Year and a half later, 10% of the homes that need to be rebuilt have been issued a permit. 10%. 10%. They got another 90% to go to even permit them for construction. And talk about lack of supply of contractors and whatnot. California, I mean, Maui never has enough of its own anyway. They come from the, big islands. They come over. And, so even less of a supply of construction and materials, and so much of that stuff has to be shipped in, unless you're just building something super basic. You're not building anything basic in Pacific Palisades. Maybe in Altadena you are. But, so you got statewide insurance costs. They're just going to go through the roof. Here's something interesting. In fact, over the last 3 years, homeowner policies have increased by 123% over the past 3 years. Yeah, a lot. 123% in the last 3 years, and now it's going to go up a bunch more. Move to California. It's going to be great, they said. Excellent weather. Lots of job opportunities. Insurance? A little bit difficult to get a hold of. Now, with so many claims needing to be paid due to the fires, this has resulted in insurance providers saying that they'll run out of funds by March. Insolvency, that FAIR plan, that is just straight up insolvent. So how is all of this going to go? Are they literally going to allow contractors to use private companies that have licensed architects or licensed individuals to self-certify building plans for construction, self-certify a whole bunch of stuff within the construction process? That's what they're talking about doing. You know what I mean? Cutting all these corners in order to make this construction happen, which you might say, hey, there's a reason those corners are there, and maybe there's a reason you shouldn't want to cut corners. But, when you have 16,000 structures burned down, you got to start speeding up that process a little bit. Otherwise, people are going to start yelling at you and going, where's our leadership helping us reconstruct our community? That's all we want to do is reconstruct our community. Well, so then you start cutting corners, and then you right back to that point of beginning, and something sideways goes on there, and then people are like, all right, you screwed up the first time with the wildfires. Second time you screwed up is when you just basically got rid of all those regulations that kind of enforce the fact that, hey, you might want to build homes according to local building code. And then you might want to have somebody come back and check them to make sure that they're actually built to code relative to the plans that were self-certified. You got some crazy stuff that's going to happen. Insurance companies' rates going up. I think that is the one quantity that you're just like, yep. And insurance on everything else, I don't care what it is going to go up. It's already going up. It's already been going up because as things get more expensive, remember that temporary inflation? Remember that it's only going to be here for just a little bit. I mean, it's transitory. It's just we're in the transition between this time and that time. Inflation, it's going to rise just a little bit, but you won't hardly notice it. You won't even notice it's there. All of a sudden, eggs before the egg pandemic, whatever that is, the bird flu, rose up to like $6 a 12 pack. And you're like, what is going on here? Remember that you go to the store during the pandemic, when it was open. Is it senior hour? I'm not sure if I can get in here or not. Am I able to shop here? Do I have a mask? Do I have hand sanitizer for the cart? Because I wouldn't want to get the Rona off the cart. Yeah, that was insane, wasn't it? That was just straight up insanity. But, some would say that having your mayor in Ghana while a fire like this magnitude was a known quantity, having your fearless leader in Ghana while this happens, some would say that's insanity, especially after you promised the constituents you would do no more international tour, travel. Well, we're not traveling anymore. We're not doing that. No, Scout's honor. Pinky promise. Swear. And then she does 5 trips after being elected, one of them to Ghana. Absolutely insane. So Karen Bass, mayor of LA, did fire the chief of the fire department. Somebody had to go. Somebody's head had to roll, right? Because somebody's got to be blamed for this. So now apparently it's the chief's fault. Now the chief had been complaining to the mayor, "You're not giving us enough funding to us." And she was very vocal about any funding cuts were going to impact their ability to provide public safety to the people within their jurisdictions. And she said that loud and proud. And the mayor is like, "Nah, I don't need to take this heat. You're fired." So that's what we recently had happen. So Trump's going to blame Gavin Newsom because that's his boy. He wants to just, kick around, and I don't blame him. Newsom is going to blame the mayor. The mayor is going to blame the chief of the fire department. Fire department is going to blame the lack of water. Lack of water is going to blame the water company. Water company is going to blame and you just got this big circle of, not our fault. Hey, sorry about your 16,000 homes. That's a shame. $250 billion it's going to take to, fully redo all this. The financial impact, $250 billion. Wild stuff, right? Wild stuff. So a couple of insurance companies, getting back to our original story, a couple of insurance companies who before the fires asked to have their rates go up. Not a shocker at all. Yeah, that's not even surprising, right? That's just, day that ends in a Y, right? Thanks so much for being here. Catch up with you in the next one. Bye for now.